Welcome, Tom, to the Cashflow Mindset YouTube channel. We're here to talk about HanETF. So if you could just kindly, just for the audience, kind of just introduce yourself, tell us a bit about your background and what you do for the company.
Sure. So I'm head of research here at HanETF, and so essentially that entails kind of staying on top of the different asset classes or investment themes that we offer through the ETF wrapper. Um, so we're a white label ETF issuer, so we have a kind of model where we work with expert partners on all our different funds or ETCs. And so a lot of that is kind of liaising with them, trying to determine what the key kind of investment case is for these products right now, and then also how the product's constructed, and then it's talking to investors and helping the sales team with the positioning of the products. So my background is a financial journalist. So I was a financial journalist for several years. Worked for Interactive Investor, the XO platform as an ETF specialist, taking an interest in ETFs. And then through there, I met our CEO our co-CEO of HanETF, Dr. McNeil, and so I joined HanETF at the end of 2021.
Great. And obviously, HanETF kind of has a unique position because they offer sort of white label. They're kind of a white labeler. Can you kind of elaborate on how this model kind of benefits both HanETF and the asset managers that you partner with, like YieldMax? A lot of our audience will obviously invest in some of the YieldMax products.
Yeah, so if you think about what we're offering as a white label ETF service in Europe is the ability to access the European ETF market and lowering the barriers to do so for asset managers. So you take someone like YieldMax, obviously they're a very successful asset manager in the US, but obviously the products they have in the US can't typically be bought by European investors. So if they want to expand into Europe, they have several options. They can, go and set up their own company in Europe, but that comes with a lot of time, costs, and risks essentially. So rather than do that, obviously they can choose to come to HanETF and then leverage our kind of expertise and pre-built infrastructure, whether that's the capital markets function, the legal regulatory aspect, and then also the distribution aspects. Rather than having to set up a sales team, marketing team on the ground in Europe, they can obviously then use ours. So it's kind of like a plug and play approach to those US asset managers like Europe who want to come to the US. And then also increasingly what we're seeing is asset managers within Europe who have historically not launched ETF products. And now they're seeing, the growth of ETFs, the diversification of what's offered inside ETFs away from your simple kind of beta S&P 100 style products. And so now they want to create ETFs. They'll come to HanETF as well, rather than setting up their own internal ETF business.
Okay, and the European market is quite a challenge, right? Unlike the US market, which is one market, treated as one market, whereas in Europe
Yeah.
we've kind of got the UK, which has kind of had one regulatory body, and then you've got Europe, which is almost its own separate body. So it can be quite challenging for new entries into the space of the European market.
Yeah. Yeah, there's a lot of, if you are, say, a US asset manager trying to enter Europe, there's kind of several, there's a lot of different areas to navigate because, you have different jurisdictions. When we talk about US versus Europe, but ultimately the US is one country, one factor regulator. Most people buying ETFs on the New York exchanges or maybe Chicago typically. But it's a unified market. Europe is a continent, different countries, different jurisdictions, different cultures. So you have very growth rates of ETF adoption across Europe. You have in Germany kind of fantastic growth of ETF adoption with these savings plans. Then you have countries like Ireland and Spain, which have quite restrictive tax treatment on ETFs. So they're a bit slower in adoption. And at the same time, if you're an ETF company and you're trying to sell in Europe, you need a local on the town on the ground, sorry, sales team. So if you're listed on the Italian exchange, then obviously you need an Italian sales team to go and meet with those Italian investors. So that's why having a company like HanETF do the distribution as well is I think quite an attractive proposition for those.
Break into the European market, they see it as biggest growth potential that they have. I know Hector kind of mentioned it on his last interview as well. That it is an open market right now, and there's plenty of growth there, but there is a lot of regulatory battles and challenges that fund managers are going to have when they're coming from the US and other locations globally. So you've been in the ETF space for quite a while now. And you've been part of obviously a lot of successful ventures in the space. How has that experience kind of shaped the vision and the strategy for Han itself, and how has the company kind of grown out from that?
Yeah, I mean, I'd say if you look at kind of experience in the ETF space, our senior management team has basically um, been around for a while and seen a lot. So you consider obviously we have two CEOs, we have Hector McNeil and Nick Lankowski. So Hector and Nick, HNN, that's what HanETF stands for. Nick actually invented the world's first gold ETC around 20 years ago. And then our chief operating officer, Manoj Mistry, who was the CEO of Deutsche Bank's X Trackers, he was part of the team also around 20 years ago, which first brought UCITS ETFs to Europe. We launched the first UCITS ETFs, so the first ETFs in Europe. So, in terms of that senior management team, or two CEOs and COO, you've got one guy who launched the first, who essentially created the first gold ETC, another guy who created the first UCITS ETF. So there's quite a story history there. And then you take Hector, Nick, and then Manoj, the COO as well. I think they estimate between them they're responsible for about 8% of all ETP, so that's ETFs and ETC launches on the planet, which obviously is quite a big number. So I think the way Hector's talked about is when you kind of you learn something new every business. So this is Hector's fourth ETF business. So before he did ETF securities, Boost ETP, and really all that experience over those years and kind of comes to the table with HanETF today.
Right. You obviously work with a lot of partners, in the form of YieldMax and all these kind of companies. What's your due diligence process for kind of selecting, these asset managers to bring to the European market? And what made YieldMax a good fit for that and some of the other ones that you're looking to partner with?
Yeah, I mean, so I think one of the first points is is this a company which is kind of prepared for the journey? We don't want someone who kind of is a bit light-footed in terms of commitment to entering the European ETF space. They've got to be kind of serious with a kind of credible desire to actually kind of enter this market. And then at the same time, we've got to make sure that the product is differentiated, unique, and in demand in Europe. So, when we launch a new ETF, we don't want to launch a new ETF which we don't think has the potential to get to 100 million in AUM. Not to say they always will get to 100 mil in AUM. Market conditions vary, budget, but ultimately, we don't want to be launch. We want to make sure that we think there's strong demand and it fills a sort of gap in the market within Europe before we go ahead with launching a product.
Dive into the cover calls in a second, but how do you kind of ensure that level of transparency?
Yeah, I mean, so we're a European ETF issuer, so we're launching UCITS ETFs, which are very high standard in terms of transparency. The ETF structure itself is a very transparent structure. Obviously, it's kind of changing a bit with these semi non-transparent, but typically in every ETF we do currently, it's fully transparent. You can go onto the website every day, pull the holdings list, see exactly what's in it. Whether that is some of the more complex instruments still held by the ETF or simply equities as well. So you get that level of transparency. ETCs sit outside of UCITS, but our philosophy around ETCs is you often you might wrap something in ETC which you can't wrap in a UCITS ETF. We want to make sure that we're kind of adhering to the same standards though if it was a UCITS ETF. That it's not a way to kind of be less transparent, and this is as transparent as possible. And at the same time, as mentioned, sometimes these are complex products. So the burden does fall in terms of trying to ensure you're providing educational content, uh, explaining to investors in a clear and fair way what these products are, what they can achieve, what the pros and cons of buying something without fully considering what it is.
Yeah, and you floated some terminologies there which may not familiar with the community in terms of UCITS, ETCs. We've heard of ETFs now, and we've also heard of ETPs. So I think it'll be good to just maybe give a bit of summary for the people who may be less familiar with some of these terminologies around why you would call something, an ETC over maybe an ETF, let's say.
Yeah, so because you're right, it does get a bit confusing because obviously if your listeners are kind of consuming lots of US based content, as everyone does, myself included, you'll see everything referred to as an ETF. Now within Europe, it's slightly different. So if you take an ETF is obviously exchange traded fund, and it will typically own equities or fixed income. But there's within the European regulatory framework, UCITS, there's certain rules around what you can put inside an ETF. So you can't have, say, a single commodity. So that essentially makes within Europe a gold ETF not really possible. But instead, what is ETC, which stands for Exchange Traded Commodity. So this essentially is like it's a debt security. It's backed by the physical gold, at least in most ETCs instances. And then obviously those shares trade on exchange just like an ETF. So the user experience is exactly the same, but it's just a different regulatory structure to allow basically Europe to have have a say gold ETCs or other single commodity products.
Okay, so it's about the concentration within the fund or the portfolio itself that's
Yeah, so
driving.
you can't put just gold, or you can't put one equity inside a ETF in Europe. It has to there's diversification requirements. So instead, you create a slightly different type of product, but still trades on exchange. The shares trade on exchange. There's still the whole process of the market makers and the APs. I realize here I've just gone into some more jargon into
No,
into
that's
into my
okay.
answers.
That's okay. No, but it's good. I think it's good for investors to understand, the differences and why
Yeah,
things are labeled something. I know a lot of people get nervous when
yeah,
they think, "Oh, don't quite understand what UTC is," and then kind of walk away from it. When really, from their perspective, it's no real difference. It's just how the market has to be labeled, and based on regulations, etc. It's less around,
yeah, exactly,
one being more risky than the other. Okay, so let's
exactly.
sort of take a deep dive into YMAG. So obviously this is a YieldMax product. It came out. It's a basket. Typically focusing on sort of big tech stocks. What's kind of the strategy behind selecting that one in particular as the starting fund for you guys? And obviously, what's your thoughts on the underlying assets? It's obviously a covered call ETF. Was it purely based on popularity, liquidity? What other factors kind of came into play for that?
Yeah, I mean, look, it's you know it's one of YieldMax's key product. We were seeing lots of kind of requests and talk about not directly necessarily to us, but people online in Europe wanted access to this product. Um, YieldMax obviously keen to expand, so it made sense to do this one first. And it's a good example of a kind of covered call product done well. It's active in both its stock selection and also in its options writing strategy. So it's it, it it's not just simply writing options over the index. It's actually a active managed portfolio, and then you utilizing that expertise from YieldMax's own managers to choose where to set the strike price, etc.
And something's quite interesting with YMAG, because obviously everyone's always got confused by the name, because the YMAG traditional in the US was the Mag 7. And then they had the YMAX, which was the one that was kind of the bigger basket. Who picked the YMAG for Europe? Was it you guys, or was that something YieldMax decided that they wanted to just confuse European investors with?
I'm not entirely sure, to be honest with you. I wasn't part of the conversations on choosing that particular ticker. Um, you know, it's a variety of factors. It could be, could you get that ticker or not? And then also, in terms of the ticker, obviously it's a slightly different product in the US, uh, but at the same time, it's a big tech focus. So it still fits in with that, Lime ticker.
Yeah, yeah, of course. So obviously, cover calls strategies, and I cover this a lot on my channel with some of the videos. Obviously, they cap the upside potential of the underlying. So how do you kind of balance that with the generating the high income with the potential for capital appreciation? We've got different market conditions. Bull markets are quite prominent. We've been through quite a big good run, to be fair, and that's why some of these covered calls have probably got more attention. But obviously there is the potential for all that capping, and then we've got the particular downward trends and sideward markets. So just kind of help the community understand the cover call strategy a little bit around that, and kind of how all of that's kind of managed.
Yeah, I mean, look, I think you can see the ETF as having two goals, but one primary. So the primary goal is generating that income options premium, but it's not to say then obviously capital growth is completely ignored. I'd say it's going to be a secondary goal. So obviously the option strategy is to generate that high level of income, but then at the same time, it's actively managed. So what you can get is you could sell calls when they're out the money, and roll early, and it basically essentially reset to a higher cap. So that would obviously allow you still to capture some of the upside if you are in a strong bull market. um, you know, going above the original strike price. So that kind of flexibility in asset management to kind of basically determine those market conditions and see what kind of maybe the best approach in conditions.
Yeah, and we're seeing a lot of this strategy changes. There's another fund manager which I know you guys are aware of. With income shares, and they obviously had a lot of challenges, releasing these products to market because of the fact that the FCA and the market makers were not so familiar with these styles of products. So it was a bit of a challenge to get them to understand different strategies and rolling and closing positions, doing ladders, all those kinds of things was quite a challenge. In terms of are these kind of actively managed funds? So, from YieldMax, so are they constantly looking at the positions, accounting for, potential market volatility as an example, maybe looking at, when news is coming out, let's say earnings, those kinds of things. Are they looking to kind of close positions once they've maximized the time decay? Is it very actively managed, or is it quite passive?
No, no, yeah, I'd say it's fairly actively managed. To try and basically work around these different conditions. They're I don't think investors don't want that just simply a passive approach to this. It's an actively managed fund, and that part of it, whether it's working out when to recall those positions, or even like with the strike price. Some products might say, you're always X% out the money. Uh, you know, with this product, it varies based on what the determination is from the fund managers themselves.
Okay. And you kind of already hinted at this in what you've just said. These products were kind of marketed towards typically income-seeking investors. But who do you see as the ideal investor for these covered call ETFs? And are they mostly targeting retail investors, or are you expecting some kind of institutional interest as well, as part of these funds?
Yeah, I mean, we've seen professional interest already in the products we've launched. We've seen flows. We've had conversations with investors. So retail is I think has been the key driver so far of this market. But I think surprisingly, officers all the way around. But I think we'll start to see professionals catch up and kind of warm to these products and start to figure out how they can use them themselves in their portfolios. One of the kind of when we talk to professional investors, one of the aspects I often talk about is the fact that if they're running an income portfolio, they've often got a lot of concentration in particular sectors, and then with that particular factors, right? If you think of a traditional income generating stock, it's a bank or a utility or consumer staple. With something like a covered call ETF, you're able to then provide that income, but with some diversification, because because in the case of this product, and to be frank, most successful covered call products, there's very much a different sector skew, i.e. tech. So it allows that diversification. I think that's one of the key kind of points I see resonating with professional investors. So there's projections that the defined outcome ETF market from I think the projection from BlackRock will reach almost 700 billion by 2030. There's no way you get there with just one, either retail or institutional. It will have to be a mix.
Okay. Yeah, that kind of makes sense. And obviously, another key thing with these funds and where a lot of people get confused is some things around the expense ratio for these types of products, which can be, traditionally higher than, let's say, just owning an SPF, S&P 500 traditional, ETF, which has got a very low expense ratio. There's also been a lot of confusion around double fees in a way because obviously you're getting the YieldMax fee for some of these products.
Yeah, sure. So I won't go into technical detail on the fee structure, just at risk of kind of getting it slightly wrong, because it's much more operations area. I think also, like one of the ways to think about it. So over the past 30 years, ETFs have become synonymous with passive investing. So, tracking the S&P 500 or MSCI World Index. And so you had these big kind of huge asset houses running these strategies, and then they're charging ultra low fees for them. But all they're doing obviously is tracking an off the shelf broad market index. Tracking the same thing is fees. So all that's driven down those fees. And that's kind of normalized the idea that ETFs might be only 5 or 7 or 8 or 9 basis points. But now we're seeing the ETF structure reach into more areas, more complex areas, more differentiated areas, and so it's not the same fee aspect. The ETF is just a wrapper, and if you're buying S&P 500 or MSCI World, you're going to look for the absolute lowest. But if you're looking in the thematic or the commodity space, what you're looking for is actually, is it the best product, and is the fee justifiable for what I think that product can achieve or what it historically has achieved? Yeah, I mean, yeah. First point, I think we're in a period of, since the end of the pandemic, we're in a period of structurally higher volatility. But obviously within that, volatility will move around, and there'll be periods of lower volatility, there's higher volatility, and the premiums you can collect do decline. But I think this is one of the strengths of a active approach, and then also a writing the call on individual stocks rather than at an index level. Because essentially, then what you're doing is well, rather the fund managers are doing is they're trying to determine which stocks within that set will still generate decent compared to the rest of the market premiums from writing those call options. So, that's I think one of the key strengths. You might be in a period of dampened volatility, but then within that there'll be some volatile than others, so you can still, obviously it won't be necessarily as high premiums as in a period of heightened volatility, but you can fish within that for those names with high volatility. Yeah. And then obviously, yeah, different market environments, different strengths of either approach. If you're running an income portfolio, without giving anyone portfolio construction advice, they're going to have a range of different ways to kind of generate that income. I think obviously, as we mentioned earlier, Europe is a diverse array of countries with their own investment cultures and legal regulatory jurisdictions. I think you can, income investing is incredibly popular in the UK. A lot of investors historically have turned to investment trusts, closed-end investment trust structures to do so. And there are some nice investment trusts for income. Obviously, they can sustain the dividend payments, but holding back dividends in certain periods and stuff. So there's some popularity there. But educating those investors around the opportunities around using a covered call approach, perhaps in conjunction with their kind of long-standing trust structures. Um, I think that's a kind of key area of opportunity. And the same point I made earlier, like it will be about kind of pointing out to these kind of investors that you do probably have a high industry sector concentration within your income strategy. This as a nice extra leg to your income strategy because your exposure then is to tech stocks, which obviously one of the great things about being a white label provider is that we don't have to claim to be experts in everything, right? We're creating the product, except for ETFs and ETCs. That's what we've got to be experts in. But so if you think about in the case of cover call products, YieldMax are the experts. They're successful, well-known, big, established brands in the US, and so we leverage obviously their expertise and their recognition for bringing these products to market. And it works the same in a kind of a variety of different products we have. So our uranium mining stuff we do with a company called Sprott Asset Management, based out of Canada. They've got decades experience in metals and mining investment. They run the biggest uranium products in the world, and they do uranium mining ETFs with us at HanETF. So it gives us that ability to have these specific experts who create that product with us that we can put in front of investors, that we can draw on for the competitor positioning, market insights, etc.
Okay, and that makes perfect sense. Obviously, another big hot topic that comes up is withholding tax. Obviously, this has been a big area. Still, lots of confusion around it. I mean, one thing I want to clear up is that these products are available in the UK tax wrappers, right? So the SIP and the ISAs, which is obviously a big advantage. But there's obviously this 30% withholding tax at source for dividends, typically for European investors. Have we kind of progressed anything on creating more tax efficient structures for these single stock cover calls? Because I know this is something that's been bouncing around a lot. I mean, I know there's a lot going on in the background as well, but obviously this is a concern, obviously, for some retail investors still.
Yeah, I mean, look, there's nothing really concrete I could update you on. Really,
Okay.
it's like an ongoing area to explore. But yeah,
It's still being worked on, still being looked at,
yeah.
but no definitive answers on that. Okay, and that's fine. Obviously, another big push from the US is the weekly distributions, right? Very popular, pushed by arguably probably the community out in the US. So what are the main logistic kind of hurdles to implementing this in Europe? And do you think it's a realistic goal for the near future?
Yeah, yeah. I mean, my sense is that we're probably still a while away in Europe from being able to do weekly. I think European structure is not there to do it. But I'd say, unlike with say the tax question, this is simply a matter of something that's changeable. You can't change US tax. Well, you can, but nothing to be done in the interim. But this is essentially it's an innovation and catch up question. So don't have anything concrete, but I'd say often Europe is 3-5 years behind the US on a lot of kind of trends. Not given the time frame for when weekly would be kind of possible in Europe, but it's also often there's a slight catch up from Europe.
Yeah, and that kind of makes sense. Again, it's feel like we are always going to be a bit of a step behind, just because
Yeah,
of the decentralized way our market is. Right, we're not one country.
yeah.
We're
And
multiple.
I think too because of kind of the dominance of US investment media.
Yeah,
So everyone's reading about what's going on in the US, and then it's kind of like, you
yeah,
know, I want this sort of product, and actually it's not being launched in Europe. I want this kind of feature on the product. It's not here yet in Europe, etc. So you get that. And I think it's the nature of investors kind of seeing what's happening in the US. And unfortunately, sometimes things are a little bit slower to come to Europe.
and I think that's a great segue for almost kind of my next question, which comes up a lot. Is you know cover calls just on US companies? Is there an aspect to do cover calls on European or global stocks? And if so, what are the challenges maybe regarding those types of products? Is it a liquidity and options market issue? Do they even exist? As an options market outside the US, or is that just not there yet?
Yeah, I mean, yeah, the options market outside the US is much less liquid, more concentrated, less names. So it makes it much harder to run strategies at scale. But I'd say never say never with this stuff. I think we're always looking at new opportunities. What else is kind of in demand out there? So it, you're right. There is this issue in terms of options market outside the US. But I think it's an area to watch because I think we will obviously start to see um, you know more and more pushes to try and make this possible.
Yeah, yeah. And obviously, another big hot topic that's coming out right now is the crypto space, right? So the FCA have finally reduced some of the red tape, should we say, around some of this now. We've already got platforms like Trading 212, in fact, posted something to its users to fill out a form to kind of make sure that they are prepared, from a risk perspective around crypto. Kind of what's your thoughts on that in terms of the income space and what potential products we can now bring, which we were kind of hemmed in from bringing, in the past. I know you can't talk too much about what's coming per se, but just your general thoughts around it.
Yeah, I mean, look, there's a massive overlap, I think, with the covered call space and the crypto investing space. So, I mean, already we do a crypto equity covered call strategy. You know, and obviously, as I mentioned, it's equity, right? So it's a lot
Yeah,
easier to do. It's your crypto miners and exchanging exchange platforms, etc. So it's a lot easier to do. I think it's an interesting area to watch in terms of Bitcoin is very volatile, and as we know, cover calls work best on volatile. Um, Whether or not it's kind of it's doing on a Bitcoin ETP at this point, whether the options market is high, I'm not sure. But it's definitely, I think, an area which a lot of people are looking at.
yeah. I think there's a lot of interest in the crypto and particularly where it's going. But it's great to be able to own crypto indirectly, you know,
Yeah,
through a medium, whether that be through an ETP, an ETC, or micro strategy potentially, or a
yeah.
Coinbase or something like that, right? The third party proxy.
That's essentially what people have done with MicroStrategy
Yeah,
is for Bitcoin. It's just in a US company structure rather than
correct.
an ETP.
Yeah, it's kind of fascinating, isn't it? He's almost given the ability for those that can't buy Bitcoin directly, almost that proxy, which
Yeah,
is fascinating concept. Be interesting to see where that goes in the future, but maybe one
people
for
used to
another
do it.
day.
People used to do it with gold as a not quite the same in terms of owning loads of gold in your treasury, but you saw like these kind of equity proxy plays for assets that weren't easy to buy, at least through kind of formal channels in the past. So that's why gold miners used to be the way you played gold until Nick Alcocer created the first gold ETC, and then you had gold ETFs launch in the US. And so you get that the market will always find a way to get exposure to a certain asset class, even if in an imperfect way, if there isn't a kind of formal way to do it.
Yeah, yeah. Markets are pretty efficient that way. And people will always find a way around things quite typically. Um, just kind of bridging on to some of the things, in terms of the website, obviously cover calls, beyond the typical risks that you often see with cover calls, what would you think a nuanced risk of these products are that investors often don't think about or kind of overlook quite often?
Yeah, so I would hope the kind of risk of loss of upside, sacrifice of upside for income is where is most investors would be aware of. So beyond that, one I'd say maybe path dependency in terms of it's not just about where a stock finishes the month, but how it's moved within that option cycle. So if you take a stock, if you've done, written a call on it, 10% out of the money, and it jumps 15% early in the month, the manager might buy back the option and reset at a higher strike price, right? Because that's oh, we don't want to lose all the potential upside. But obviously, that stock might have fallen back down by the end of the month. And so we did essentially was kind of add some costs and drag some return. So that's I think one risk which I don't necessarily see covered that often.
Okay, I think that's a fair point, and you've raised another really good point, which is a lot of people get scared around NAV, particularly in terms of what true NAV erosion is. A lot of banding around return of capital comes into play, which, yes, there is good and bad return of capital. Depending on, US, they kind of see it as a tax treatment as well for a lot of these funds, which I think a lot of people don't quite understand. They watch a lot of American YouTubers and they just say, oh, you're getting your money back and those kinds of things, which you can still lose on a trade, which is why they're able to almost treat it as a return of capital for tax purposes. But obviously, they're still generating the premiums from the options, right, which they're distributing. But could you kind of elaborate in terms of, obviously, you talked about going through the strike. A lot of people sort of panic and think, well, okay, we've gone for a strike now. That's not good. We've lost all our shares, or we've lost all that potential upside, and that's part of the process. But what happens from a sort of NAV perspective when that happens?
Yeah, I mean, essentially, the fund's NAV shouldn't then move in line with the stock beyond that level. And that, but it's just back down to that trade-off. Essentially, you're sacrificing that upside, and you should come into cover call investing with a clear mindset that if we have a out of the world rally in Nasdaq or whatever, you're not going to fully capture it with this product. But it's all about obviously understanding what you've bought and what trade-off you've made. Everything's a trade-off essentially.
Yeah, and I've got another question. I guess it's kind of left field question in a way. Obviously, with some of your competitors, because they're running their own options in sort of this time zone, they've kind of got this lag effect between the kind of market opens and closures, and you've kind of got it with, I suppose, your UK listings in a way. So how does it happen, like in terms of the overnight swings? Let's say the underlyings that you've got within, let's say YMAG, drop overnight, but the UK market's already shut. How is that adjustment done?
To be honest with you, that's a bit beyond my area in terms of how that's maintained. So yeah, sorry about that.
That's okay. We'll make sure we get an answer for the next time we meet. What I'll do is I'll get you guys to take that away, and we can do a follow up in the comments where we'll pin it and get back to people on that one, because I think that's an important one. That's quite important for people to understand. Tell me a little bit around kind of on a, I guess, on a more personal note. How would you kind of describe your own investment philosophy, and how's that sort of philosophy guide the types of products that your business and the partners bring onto the sort of the platform or your organization?
Yeah, I mean, I'd say my own investment philosophy is very much kind of core satellite approach. So have that kind of broad market exposure, and then you have some other positions around different themes or asset classes for a more kind of tactical approach. So you know, in terms of how that impacts our product range, if I see something in kind of the literature I'm reading, which I think is going to gap in the market, then obviously bring it to the product team, and then obviously any of the kind of fund partners we have who are looking for a product idea that can potentially feed through to that.
I think that's great. That the owners and CEOs are open to those types of conversations, because I know in this market it can be quite a challenge, from that perspective. In terms of the white labeling module, can you kind of explain the kind of dynamics between your teams and the teams of your partners like YieldMax? Like who's responsible for like day-to-day portfolio management decisions versus the operational and the distribution kind of side of things?
Yeah, so so with YieldMax is we've known them for years, so it's kind of a very easy relationship. Essentially, they're responsible for that portfolio side, uh, while we're handling the regulatory, operational, capital markets, and distribution. But it's that distribution where YieldMax comes back in a bit because essentially, we're leveraging them as the experts. So they're keeping us up to date on what's going on in the portfolio, relevant news or kind of messaging or content research. Within the marketing team, we obviously then use to refine their messaging, and then also then the sales team kind of spread out across Europe. We've got a sales team in Italy, Germany, France, uh, and the UK, obviously. And so they'll use this for kind of engaging with their clients, and also drawing upon partners on our funds for the sometimes face-to-face meetings with those investors as well, if they want to hear from the expert behind the product.
Yeah, that's yeah. So you've clearly got that, expert day-to-day running of the portfolio, and then yeah, you guys are more responsible for the operational side of things in Europe, in particular, to make sure all the distributions get out to us, etc.
Yeah.
So I think those are really key distinctions. And so just kind of help me out understand a little bit more around what does the typical day look like for you, right? What are your key challenges, you know, and what's also rewarding? What keeps you in this space, right? What keeps you in this landscape?
Yeah, day to day, very hard to describe. But essentially, what we're trying to do is keep up to date with um, what's going on in the ETF market. Who's buying what, what's popular right now, broader macro considerations, what might be popular, um, what the latest kind of developments are in the different kind of themes or asset classes. And then, in terms of my role, is there something to write to send to the sales team they can put out? Is there something to send out to the press? If there's a particularly kind of popular press sort of topic, we can have some expertise on. And then also, doing lots of kind of investor conferences and webinars, so keeping decks, reflecting all that latest news and developments. Um, and in terms of the rewarding aspect, like, when I joined, I knew nothing about uranium, uranium mining. Just to give one example, then about a year and a half in, we launched our uranium mining product, and now I'd like to consider myself fairly knowledgeable in this area. So this is one of the great things about white label is you get there's a constant flow of new areas, new parts of the market, new themes, which then you're kind of having to learn about and kind of become almost expert on.
Yeah, and on that point, I think you've released a new product fairly recently, right? You've
Yeah,
released
yeah,
something new
yeah. The
around.
latest is preference shares ETF. So another kind of classic example of taking that US expert, US based asset manager, and then wants to come to Europe via HanETF. So this guy's called Infrastructure Capital. It's actually quite interesting. The CEO of Infrastructure Capital was quoted by Trump a couple of weeks ago for his economic analysis. A guy called Jay Hatfield. That was some nice PR before we'd even launched the ETF, seeing the CEO and the PM of the ETF being quoted by the president. Never seen that happen before. So that was quite cool. So the product is essentially a mirrored version of a version they got in the US, like adjustments just for local regulation. And it's these preferred shares, which is either income focused. So essentially preferred shares you can view as they're hybrids equity, so they have characteristics similar to debt. They have a fixed dividend. So, like bonds, fixed income, and they're senior to common equity. So it's a different way to generate that income, and this portfolio is actively managed. The version in the US has got several billion within it. So obviously we've only just listed it in Italy, um, but be listing on the London Stock Exchange and the Italian Stock Exchange very soon.
Okay, and what's its? Is it typically, is it going to be a monthly payer or?
Yeah, monthly. Yeah.
Yeah, and is it, what kind of yields are you anticipating?
Uh, yeah, wouldn't be able to give you exact number right now, but yeah, sorry. Uh,
No, that's okay. We'll look it up again. We'll look
yeah.
these things up for people. But okay, so is it something that's already been published on your website, or is it not been published yet?
Yeah, I don't know if the yield is published yet.
No, I meant,
Obviously,
sorry, the product and the prospectus and
yeah,
things like
yeah,
that.
yeah. So if you head to HanETF.com and then on the fund pages, you can see under the equity income, this ETF.
Okay. All right. Well, let me know, guys, in the comments below, and whether you want me to cover that fund, because I tend to cover a lot of them, and maybe that's one that I'll get around to covering once the full details are published. I'll go and check it out actually after this video, and then I'll post an update to the community on that one. So just kind of wrapping up, what would you say has been the most surprising development you've kind of seen in this space? What's your biggest kind of lessons that you've learned from that as well?
Uh, I think the in terms of the ETF space, the importance of being first or second to market in terms of a product being successful or not. I think you can have sometimes the best product in the world, but if you're fifth, sixth to market, very hard to anyone to care. You know, one of our most successful ETFs, our global defense ETF, we weren't actually first to market, but very close and second. We launched that 2 years ago, and kind of saw steady increase in interest. And then, you know, we launched it before the interest came in terms of defense. Obviously, everyone has seen the news this year with the Trump and Zelensky fallout, European defense spending. Having that product in place, having had it marketed already, and already a reasonably successful product, kind of having that timing completely perfect. I think that's one of the most surprising things is how important that timing is. If we watched the news in early in the year and decided to go and try and launch that product, then it wouldn't be at the 3 billion.
Interesting. And have you got any questions, I guess, back to the community? Obviously, we can take a lot of feedback in the comments and in the Discord, and we can obviously share that back to you guys.
Yeah, one area I'm always interested to kind of hear is how this community is using covered call products in terms of their portfolio construction. Are they simply looking for income only, or does this sit alongside like a range of different products to this is their income segment of their portfolio? Are they owning then or Nasdaq or whatever inside it? You know that'd be really interesting to see kind of what their approach is.
Yeah, I think we've seen a lot of people move towards the baskets, because they've been a lot more twitchy. I think a lot of people thought they could handle the single stock volatility, but I think people are starting to realize that it's probably quite a bit more than what they anticipated, and the income can drop by 50% or 75% even. And it didn't help that the first players that came to market were very restricted in the strategies they could do, due to kind of the market makers and things like that. So I think that spooked a lot of people, and people are a lot more comfortable with kind of the basket side of things. And I think people are also, I guess people are in different positions right now. Some people are in the purely income space. Some people are in the kind of income, but with a little bit of growth. And some people are using that income to fuel the growth. So I think it's a bit of a mixed bag. But for sure, I'll get feedback from the community on how they're using these, and make sure that that gets fed back to you guys. Um, I guess, is there anything else you want to raise or ask the community?
Yeah, I mean, also you're always interested to hear kind of other um, segments of the market that they're interested in, seeing cover call strategies covering. So obviously you have the tech, got the crypto equity, but there's a lot more out there. what their views are in terms of where else they think this might be going.
Yeah, for sure. We'll get a poll out on that and see what other people are feeling around what other funds they'd like to see. Okay, great. So Tom, thank you for your time. I know you've got a busy schedule, so we always appreciate when fund managers can take the time to spend an hour with us, explaining what they do, how things work. So I appreciate it as always. So thank you for that.
No worries. Thanks for having me.